I mean, price obviously. I mean, we exploded through $100 an ounce on silver. It went through $5,000 an ounce on gold. But that's not the story. The story is there's already over 40 million ounces uh, standing for delivery in January. January is a non-delivery month. And if you go back in past years, you'll see that the delivery for January might be 1 million or 2 million or 600,000 ounces, whatever, small amount. We're at 40 million already for January with just a few days left. Uh, March is a delivery month. That's the month where I'm going to be really interested to see what the number is at the beginning of the month to see how much is standing. If you get, I don't know, 70, 80 million ounces standing at the beginning of the month, that tells you by the end of the month, there's going to be way more and probably enough to uh, knock out the inventory. So from a supply or a delivery standpoint, to me, I'm interested in March because that's like I said, it's a primary delivery month for COMEX. Now, what's going on behind the scenes, and I fully understand it. I did
Wait, wait, wait,
not.
wait, wait. Before we
I
go on
got to
behind the
admit,
scenes, hold on just a minute. Before we go on behind the scenes,
sure.
I want to, because we're getting to the point where you're doing the math numbers, and your math is coming up to where if you get 70 or 80 million stand for delivery ounces by March, you could knock them out. In other words, it'd be a failure to deliver. How much silver is there for them to deliver? If you believe what they say, how much is there for them to deliver right now? And what happens if they fail to deliver in March?
Reportedly, they have 110 to 120 million ounces uh, registered, which could be delivered. The question is any of that encumbered? We just don't know. Um, if we get a failure to deliver, basically that just completely negates any and all value of a COMEX contract. If you're hedging or if you're long uh, or short, I mean you don't know. Uh, you don't know. I mean, if the contract can't perform, it's worth zero. So basically, a failure to deliver wipes out any credibility of COMEX pricing. And of course, for the last 30, 40 years, they've used COMEX as a way to beat down assets that they don't want up in price, and they levitate assets that they want up in price. But a failure to deliver in silver will immediately spill over to gold. A failure to deliver in gold will immediately spill over to the credit markets because gold truly is the anti-dollar or the anti-U.S. Treasury. Uh, treasuries, and understand that treasuries have always been thought of as the risk-free asset, the safe haven. And that is changing, and I think it's about to change from a perspective standpoint, meaning when bad things happen, usually yields go down on U.S. Treasuries. Now, we've had one easing cycle where interest rates actually went up instead of down. We're in another easing cycle, and rates are still sticky. Rates have not gone down at all from when they cut the last time. I think they're actually up 10 or 15 basis points. The point I'm getting at is if you got Treasury bonds dropping in value and yields going up, while the Fed's trying to lower rates, it shows that they're losing control of the yield curve, and slowly but surely, and this has always been true, but the perception was not there. Gold is absolutely the safe haven. Treasuries are not the safe haven because they're issued by basically a bankrupt entity. So what I'm getting at is a failure to deliver in silver that will spread, and it's going to ultimately spread to the Treasury and the currency markets themselves.
Wow. That is that. Go ahead. You lost your sound there, buddy.
No, I'm still here. There's this big lag because of the
Oh,
storm we had.
you do have sound. Okay, sound good. Sound good. Before I go on, I want to get this in early on. I got lots more questions about how this will spread from silver to gold to credit markets, and also you have some news about wholesalers bankrupting. Hang on to that thought. I want to get into that before we go on. I want to talk about the wellness company. This is the wellness company, a contagion emergency kit. In here, just so you can see, here's the kit right here. In here, packed full of emergency medications, ivermectin, hydroxychloroquine, a generic Zithromax, which is azithromycin, which is a Z-Pack. Also a nebulizer, which I love this because you can put budesonide, which they also give you, and you could, a lot of the stuff that you have in terms of stuff that is contagions is airborne. And you can start treating your lungs immediately with this nebulizer with the budesonide they give with it. Also, there's Tamiflu, and there's talk of them wanting to engineer another awful, pandemic. And what happens if they're successful and they end up having millions of people and emergency rooms full, and we'd love to give you that medication, Mr. Hunter, but you'll have to wait 3 weeks. Maybe you don't have 3 weeks, but then this is why you have the Wellness Company Contagion Emergency Kit by the Wellness Company. It is a stock full of life-saving medications and antibiotics that you can get in a pinch and have in your possession if you need them. They also can give you help at the Wellness Company if you become a subscriber, and you'll get actual doctor help that you can call on the phone or call your own doctor and say, hey, I've got budesonide and an inhaler. Should I use that? I've got, a Z-Pack. Well, what should I do with that? There's all kinds of things you can do if you have the medications, and that's the Wellness Company has this right here, the Wellness Company, the Contagion Emergency Medical Kit. You get 15% off and free shipping by using the promo code USA Watchdog. Back to Bill Holter. Bill, I want to talk about this bankrupting of wholesalers. And people might say, what does it have to do with me? No worries. Bankrupting of wholesale, bankrupting of private credit. There's a story on about
That's exactly right.
Zero Hedge talking about how there's some big players that are having trouble with their credit in the banking system. What's going on with the bankrupting of the wholesalers and problems with the private credit market?
If you have major wholesalers that are having financial problems or go through insolvency, you will see a different metals market immediately. I don't know what that's going to mean to availability. At this point, this is all caused by higher gold and silver prices, primarily higher silver prices. The way dealers work, all of the major dealers, I think there's 27 direct dealers to the U.S. Mint. Every one of those have to sign a contract stating how many ounces from the mint, and it's the U.S. Mint, the Canadian Mint, the Australian Mint, the Austrian Mint, all over the world. These dealers sign contracts saying that they will take on X amount of ounces at the beginning of the year and then X amount of ounces throughout the year. The problem is these contracts were drawn up when silver was $30, $35. Now it's better than triple that. So these dealers, in order to carry that inventory, they're having to borrow 3 times more than what they expected to borrow. That's the first thing. So that's putting them on their back foot as far as having availability to liquidity. The next thing is when a dealer takes inventory on, what they do is they will sell a futures contract, or they'll mark their book. They'll sell a futures contract against their book, against their position. to try to be flat so that they have no risk if the price goes up or goes down. The only problem is silver has gone so far and so fast that these dealers are getting margin calls on their hedge position. So they're getting a call every day saying, you got to send us $1 million, you got to send us 5 million, 10 million, whatever. So they're getting whacked on both ends. And this is all happening at the same time that the public in North America has been a massive seller of silver. I mean, you had the way to buy silver back in the late 70s and early 80s. The only way to buy it for an American was junk silver. That's pre-1965 dimes and quarters. They're 90% silver. And what the dealers started to do, because they were getting so many sales, is they were just sending them off to refineries. So they're melting the silver down and they're getting their credit that way. The problem is the dealer doesn't get paid for 4, 6, now it's 8 to 12 weeks. So that's an additional chink in the armor, if you will, that the dealers are having to deal, or the wholesalers are having to deal with, because they're taking inventory in, and that's eating up their credit lines. What you very well may see this week is you may see 1, 2 more, I don't know, major wholesalers bankrupting or going through reorganization. It's a financial problem. It's crazy. You would think that the price of silver going higher would not be a bad thing for dealers that own the metal, but it is a bad thing because they've hedged it, and now they're getting margin calls from the financial system. It's a financial train wreck because they're getting whacked from every direction.
What about the private credit people? What about some of these banks? They're in trouble. They're also having big problems, are they not?
We're actually not hearing about it, and it may be that they're being bailed out behind the scenes, because there has to be billions upon billions of losses amongst the banks that shorted silver. I mean, silver's up what, 80, $85 since October, and every dollar that it goes higher for an institution that sold silver naked short, they lose on, every time silver goes up, they lose money and they've got to put money up. Now, we haven't heard of any insolvencies or anything like that, and that leads me to believe that they're being bailed out behind the scenes through the back door.
You think Bessent, the Treasury, the Fed, whoever is covering their banks? Is that good news or is that bad news?
That's my guess.
Is that good news or bad news for them?
Well, they have to, otherwise the banking system collapses. I mean, what happens if you have one of the big money center banks that's short, I don't know, to use the number, 300 million, 500 million, whatever ounces, and they're losing that amount on every dollar that silver ticked up? Is it a good thing that the banking system doesn't completely collapse and blow away? Yeah, that's a good thing, but it doesn't change. It doesn't change anything. I mean, the fact that they're propping these call them paper sellers, propping them up. You cannot, like you said, they can't print silver. The problem is there's more demand than there is supply, and the price of silver has been suppressed since, call it the 1980s. So the last 40 years, the price of silver has been suppressed with unbacked naked contracts, and it worked until it didn't work, and it's not working now because people are standing for delivery and saying, no, I don't want fiat. I'm not accepting dollars as my win. I'm walking out of the casino with my metal. And that's what's putting the feet of the major bullion banks to the fire.
Boy, I'm looking at this failure to deliver thing that you've talked about, and it, years ago, it's just like, oh, they'll never not deliver. I mean, Cliff High said years ago, oh, well, I keep getting this number $600 an ounce on silver, but I'm a terrible predictor of silver. Wow. Well, when it's going up 5% a day, you start looking at Cliff High's number and say, maybe it's not going to be too far off. Maybe what sounded crazy 3-4 years ago, not so crazy now. And so, where are we headed with the price of silver? I've heard all kinds of crazy. I've heard Eric Sprott say it'll be up 150 in no time. That was just a few weeks ago when it hit $114-15 on Monday, and then other people say it'll be $300 an ounce. I've heard Cliff High $600 an ounce. Other people are, who knows? Where do you think the price of silver? Where do you think the price of gold are going to end up?
I'm not going to give you a number. I'm just going to say much, much higher. And let me just say this, the gold and silver are certainly due a pullback in price. So if we get a pullback in price, it's probably a healthy thing. And don't start pulling your hair out and thinking, oh, the rally's over. It's not. We're still early in this price wise. And I'm not going to give you a price because as I've said, anyone who gives you a price doesn't know, but any price that you hear is probably going to be laughably too low. And I'm going to include that $600 figure that you mentioned with Cliff High. I think any number for gold, any number for silver that's put out there today, in the end, will end up being laughably low.
This is really not just a gold and silver story. It's really an entire global economy story. Am I wrong?
It's absolutely a global economy story. It's a move away from not just from the dollar, but it's a move away worldwide from fiat. The fiat experiment is failing.
If what's going to replace? I mean, right now they have gold on the books. Either 8.2 or 3, or 8.1, 8.3 metric tons, 8.3 thousand tons. Right? They have it on the books at around $42 an ounce, and that's a cartoon. I mean, silver used to be below $42 an ounce. Now it's almost triple that. So what about the gold in Fort Knox? Are they going to have to revalue that to say, hey, look, we're rich. We really have way more money than we thought we had, and not just 5,000 or 6,000. Do you think they're going to raise it up to pretty high numbers? There's talk about that. Them raising it up to 10,000, 15, 20,000. There's talk about that, and most people think, oh, that could never happen. Like, when gold was, 1,800 an ounce. Oh, 5,000 an ounce. Well, we blew past that. But are they going to revalue gold in the vaults that we supposedly have?
That's the key word right there, supposedly have. Do we really have it? I don't believe that we do. There's not been an audit since 1956. So there's no way to know whether that gold is actually there or not. But even assuming that the gold is there, if they revalued gold to $20,000 or $30,000, it would do nothing. And the reason I'm saying nothing because at $5,000 an ounce, you're only basically you're making the gold reserves worth $1 trillion, and there's 38 trillion of on books debt, and then if you look at all the debt, all the guarantees, all the promises, it's over $200 trillion. But just to back 38 trillion, take 5,000 and multiply it by 38. And that's the number they're going to have to get to if they want to actually back the on-books debt by gold. Well, so you're talking close to $200,000 an ounce.
Yeah, just call it 5,000 and say it's not 38 trillion. Say it's 20. It's just say it's 40 trillion. That's a lot.
Yeah, that's $200,000 an ounce.
200,000
is what that would work out to be.
You're saying that gold could hit if they just backed our known debt and commitments, gold would be 200,000 an ounce. That doesn't seem so far fetched that gold is 5,000 an ounce now.
Well, $135,000 an ounce was the calculation 4 or 5 years ago, and that was when gold was 1600, and people were like, oh, that's just crazy talk. It's not, it's math.
Uh, this this could the well, I'm freaking out here with all I'm watching it being underreported on television, and I'm wondering if this is. I mean, they did bring up, oh wow, on Stuart Varney that gold was up at $5,100 an ounce. It's down as we do this interview. It's down now. It's at $5,050. Um, are they Why are they not reporting on this massive move in silver and a pretty doggone good massive move, record highs in both metals? Why are they not reporting this? Why do you think this is such a big, I mean, if Nvidia was hitting all-time highs, you'd hear nothing, you'd hear it all 24/7. If Amazon was hitting all-time highs, you'd hear it oh my gosh, Amazon, if Microsoft was hitting all-time highs, oh my gosh, if Tesla was hitting but not with gold and silver. Why?
Well, that's simple, because gold is, like I said before, gold is the anti-dollar. Gold is the direct competitor to the fiat system. And you don't want to, it'd be like waving a red flag in front of a bull. I mean, the less they talk about it, they think, nobody's going to see it, or less people will see it. And that's for sure. Less people will see it. But it doesn't matter. The supply demand situation is the way it is, and there's no way to hide it. But that's what they're trying to do is hide the fact that this stuff is, that the fiats have collapsed versus gold and silver. And again, gold and silver don't go up, they don't go down, they don't do anything. All they are is an ounce. All they are is a measuring stick, a yardstick. And they tried for years to break the yardstick gold, the gold market. They tried to break the thermometer. And I mean, they did that clearly in the early 2000s when you had gold at, 275, 300, 350. And you'd have government after government coming out saying, we're going to sell however many ounces of gold off of our balance sheet. Well, it's the opposite now. You've got central banks from all over the world making an announcement that they're buying, millions of ounces of gold. The last one, I think, was Poland last week, said that they're going to increase their gold position. So it's all because gold is the direct competitor to fiat, and fiat is failing.
What do you say to people that say, wow, I had a friend of mine last night on the phone saying he sold some of the silver. He says, I bought it at $5. Okay, well, okay, fine. But he says, I was afraid it's going to go back down, like they did when it was in 2011. They drove it down past, 50, and it went back down, and they drove it down. Are they going to be successful in driving the price down again? Why or why not?
I don't see any way that can happen, because they can't print silver. And silver is in a 400 to 500 million ounce per year supply demand deficit. And the way that you correct the supply deficit is you increase the price. When you increase the price, that lures people to sell, and it also creates the investment opportunity to mine more silver. However, that part of it is very, very slow. It'll take 3 to 5 years for today's prices to be filtered into the mining capacity, the profile of the miners as far as what they can produce. It's not like they can open and close a spigot. That's not the way mining works.
Oh boy, you've talked about this in the past, and I don't want to sound gruesome, but I want people to understand this, that you could have the entire system go down here. I mean, if you get a failure to deliver in March, and you're talking about it affecting gold, it affecting the entire CME, the whole paper market, the way things are priced, affect the treasuries, the dollar. you were one of the first people to bring up a Mad Max scenario, the movie Mad Max, where everybody's just fighting for fuel and bits of food and whatever. Can you just tell people some of the things they need to, what you envision happening if this thing goes full on failure to deliver and it ripples through the economy?
Yeah, if silver goes failure to deliver the same day or the next day, that'll happen with gold, and that will spill over to the credit markets. And understand that the credit markets run strictly on confidence. And if you're showing the marketplace that there were contracts out there that were fraudulent, cannot deliver, they go to zero. Those contracts are worthless. And what is the inverse of zero? The answer is infinity. A cup of coffee will be infinity for dollars or euros or whatever currency you're talking about, because those currencies zero out. It's a collapse of the entire monetary / financial system. And going one step further, and I've talked about this 100 times on interviews, just take a loaf of bread. A loaf of bread has at least a dozen uses of credit to get that loaf of bread on the shelves at the store. If credit hiccups or is not available, there's no bread. There's nothing else. I mean, nothing else will get done. The real economy runs on credit. Everything you touch, everything you do, everything you look at, credit has been involved in its creation. If credit becomes unattainable, the real economy completely shuts down. And that's where your Mad Max comes in.
Woo! How would it be unattainable? What would happen? The banks would just shut it off, right? Your credit cards wouldn't work. Nothing would work.
You're asking how would credit not be attainable? I don't know. A failed U.S. Treasury auction. That would be one right there. If you've got banks in trouble themselves, they're calling loans in. They're not putting loans out. And one other thing we need to talk about, which I wanted to make sure we talked about this, the yen carry trade is blowing up. And the yen carry trade is what financed the financial bull market since the 1990s. I mean, you had entities going out borrowing in yen and doing that at a rate of a quarter point or half a point because rates were so low in Japan. And then they'd take that money and they'd buy treasuries or buy stocks or whatever. It was free money, free flow, and they were able to profit off of that. The problem now is the interest rates in Japan, the 30-year rates are over 3.6%, up from less than 0.5%. And the yen itself is losing value. The yen itself is getting wiped out versus the dollar. So those that borrowed under the carry trade, now the carry is more expensive because the interest rates are higher. And what you have, you've got to go out and you've got to buy dollars to pay that back. So it's a leg of the stool that has held everything up. That's going away.
So, boy, I asked this too, because you're being a Holter. You're a common guy, but a smart guy. I'm a common guy. My dad was a machinist, but I don't know if I'm as smart as you. But what I want to ask you, what would you be telling people? You tell people this, and they just like, that won't happen. Oh, well, it's just like, gold's going to hit $5,000 an ounce someday. That'll never happen. Yeah. Silver's going to break $100 someday. That'll never happen. Yeah. Okay. So you're talking about empty grocery store shelves, and you're talking about things where people need to have things to back them up. Am I wrong? Would you be telling people, listen, well, some of the best commodities to have is water and food that you can get your hands on in a tight time? Am I wrong? What would you tell people to do?
Just be prepared to go it on your own for a period of time. I can't tell you how long. Is it 2 weeks, 2 months? God forbid 6 months or more. And I say 6 months or more because you get to that point, people don't know how to hunt. People don't know how to fish. People don't know how to survive. People know how to go get in their car, go to the grocery store, and buy what they're going to eat for dinner tonight. That is not going to be possible. You need to try to protect yourself, your family, and figure out if stores weren't open, if banks weren't open, if you dial 911 and nobody answers, how are you going to survive? You need to think about that now, because that is, I'm going to say, well more than a real possibility. At this point, it's a probability.
Last question I just want to talk about, because you had a big day in TRX, which I do not own TRX. I don't own any stock at all whatsoever, but you do. And I'd be remiss if I didn't have you on. You had some big days in TRX with the price of gold and silver. Primarily TRX is gold, but you've got a big day in TRX. What's going on with TRX?
Yeah, it's up on huge volume. The last I looked, it had over, I mean, until a year ago, TRX was trading 400, 500,000 shares a day. That's increased to about 1.5 to 1.7 million per day.
Woo.
And today we've got, last I saw, was 22 million shares, and the stock was up 23 cents, 24 cents. I think what's happening is there were some big short positions in it, naked shorts. I don't think they're all closed, but I think some of those were forced out, and that's why you saw the big jump today. But it's just, in my view, the price where it is now, it's certainly justified. This is going to be a 60,000 ounce plus producer within 12 to 18 months. They're doubling their plant capacity. They're doing that from internal cash flow. They're not selling shares. They're not borrowing money. Their current ratio is now positive. So, they've built up cash on hand. And the real wild card, and again, the reason I bought it in the first place was because of the land package. They did discover 2 new gold-bearing zones in the last 18 months. They know that there's gold there. They don't know how much. It's not been drilled out. But now they finally have the cash flow to start drilling that out. And I'm looking forward to seeing some drill results with some hot holes. And right now, I think that 2.1 million ounces of proven resources. Where's the stock going to be if you double that or triple that?
Very good. Last question then.
So yeah, Jim's.
Go ahead.
I was just going to say Jim's dream and Jim's foresight looks like it's coming home to roost.
Yeah, it's Jim Sinclair, the great Jim Sinclair. You are now the new Mr. Gold. He was Mr. Gold, but passed on. Rest in peace. Jim Sinclair, loved him as a good man. But you're there. He worked with you. He loved you. You loved him. You passed the baton. You are the new Mr. Gold. And last prediction, and this isn't a price prediction, but your failure to deliver scenario unfolds when?